Hello and welcome to Mutual Fund Guide. It's all about your funds and your returns. I'm Vandita Shivle. Joining me on the show today is Vatsal Shah, Head of Wealth Management at Sushil Finance. Welcome to the show, Vatsal, and thank you so much for joining us today. V. Rajaram is emailed us from Madurai. He wants to invest in the best ELSS tax saving fund for ATC investment. What are you recommending him, Vatsal?
Yeah, so Mr. Rajaram, for his how to pay LSA fund.
So he
Return of
wants to know the best ELSS tax saving fund.
right. So when we look at the 3-year investments, 3-year returns on a consistent basis, so Axis long-term equity does stand out as one of the best, which has consistently performed over 3 years over any time frame. So that is one of the large funds which I would recommend him. There's another fund which is an IDFC tax saver fund. It is little volatile compared to Axis, but it does bounce back every 3-year basis. So that also is a good fund to invest with.
All right, so that's the recommendation for you. You know, we also looked at a lot of other tax saving investment options for you viewers, like fixed deposit, PPF, National Savings Certificate and National Pension System. And let me tell you that ELSS has the lowest lock-in period of 3 years, highest return of around 15 to 18% that you could expect. And the only disadvantage is that it is a little riskier version. But having said that, it's a great tool for your wealth creation. So if you are interested, definitely go for it and it will give you the benefits as well. But it would have been best if you would have invested in the month of March and April for saving on taxes. But nevertheless, you can invest in the funds that our expert just mentioned. Let's now look at another email that's coming from Norway. Sachin, who has emailed up. Now what he says is that he's investing 10,000 rupees in the following funds, like Mirae Asset Focused, Mirae Asset Emerging Blue Chip, SBI Small Cap, Kotak Standard Multi Cap, and he's investing 5,000 rupees in HDFC Mid Cap. Now, he wishes to accumulate 4 to 6 crore rupees in the next 15 years. So, Vatsal, what do you think with the current funds and the SIP that he's investing in, I mean, you know, those kind of allocation that he's using to invest in these funds? Do you think
Right.
that's the right way?
Yeah, so first if we do the math, so the current investment of 45,000 per month which he's doing, so even if you assume that it will compound at 15%, which is quite an aggressive or a higher side, in the next 15 years it comes to 2.7 crores. Now, whereas Sachin wants to accumulate 5 to 6 crores in the next 15 years. So he's clearly falling short of his investment target. And, if we look at just doubling up the current investment, say 45,000, if he makes it 90,000, then he can expect that, he can gather to some extent about 5 to 6 crores. Without that, it will be difficult. Now, if he doesn't have this money right now, then he has to do a top up every year. So he has to make sure that every year he's adding the amount to the SIP as much as he can to reach as close possible to his target.
So at
Coming
least
to the fund selections are good. We just recommend that since he has more weightage to Mirai, he should look at a Franklin mutual fund also, which has also consistency and has a larger, longer pedigree. So Franklin India Focused Fund instead of Mirai Focused is a better alternative for this particular client.
right. So maybe he can look at Franklin India Focused Equity that you've just recommended him. Right. So that's a recommendation for you. You need to increase your SIP allocation because, with your current investments, you'll be able to reach 2.7 crore in the next 5 years. So if you want to accumulate up to 5 to 6 crore, you need to have an SIP of at least 90,000 in all those funds in order to reach your goal. But all the very best. Let's now look at another caller who's on the line from Bengaluru, Tripta. Hello and very good afternoon, Tripta. What's your question?
Yeah, I just wanted him to review my portfolio.
Okay.
And I just wanted him to just give his review on the Reliance equity, which was I had invested in last year, which is in the negative, and also the small companies, Franklin, is completely in the negative from a 40% to a minus.
Okay. Sure.
Yeah. Hmm.
So we'll guide you with that, Tripta. So what are you recommending her, Vatsal? She has been investing in debt funds and equity
Okay.
funds. There's a closed-ended fund as well, but what do you think?
So I think the investor has entered slightly at the higher price point. So when we say Franklin India Smaller Companies Fund, which is down 40%, I mean, you need to look at a smaller company fund or a small cap fund with a regular investment approach. So had you invested the same amount over a period of 1 year, it would have been much better. So any small or mid cap investment should be done. Now, given this fund is good, so what we recommend is that if you can allocate more money to it to bring down cost lower, that would be much better. Otherwise, getting a 40% jump immediately will seems difficult. So one should look at adding to it at current levels. Second is your exposure to Reliance Hybrid Fund. What data we have, we feel that it's a very high exposure to a single particular fund. So what you need to look at is you need to actually split it into two or more, balanced funds. And to give that, you can consider the Aditya Birla Balanced 96 Fund, which is a good all-weather fund as well. So, you are well diversified in your balanced portfolio as well. So you're not concentrated on a particular fund manager. I see that you don't have a mid-cap fund in your portfolio, so you can look at adding Mirai Asset Mid-Cap Fund. It's a new fund, has good stock selection, and again, not just one shot, but you invest it over the year in small parts.
Right. But Vatsal, would you like to recommend her any kind of STP option or like anything like that? I mean, if you think something could be
Yeah,
worked
so
out.
an STP, so when we say that you have to invest in parts, it's the STP route only which would work. So if she has, say, 5 lakh rupees to invest, and we look at a time period of, say, 10 months. So every month, 50,000 will get invested through an STP route from a liquid fund to the given equity funds. So that at least in this market, one should look at doing it in STP route only and not as one shot. So,
Right. So you definitely need to work on the diversification part, Tripta. Very clearly, you have exposure of around 45 lakhs in a single fund. So that's not the right approach to go ahead, in order to get and reach to your goal. But our expert have suggested you other means through which you can generate, a decent amount of wealth. But are you clear with the answer?
Yes. So on the small companies, would it be a good idea to do an SIP?
Okay.
yes,
If I
it
manage
would be
to pull
good
it out. And,
it would be good. Yeah,
Yes.
it would be good to do an SIP now. You can start one now.
okay, so, and Reliance is a little in the negative, 3% in the negative. I guess I can wait and for a little market turnover and then, decide to pull it out.
So don't try to time the market. See, what happens is
Hmm.
you are betting too much on a single fund manager. And
Okay.
even if the market reverses, what if this one doesn't reverse as much as the other one? So it's better to, diversify it across 2 or 3 funds. So as we suggested that you have 20 lakhs in ICICI, 20 in Aditya Birla and 20 in Reliance. That would be a good mix of your investment.
Okay. Okay.
That
Right.
would be better. Yes.
Right. So that's the recommendation for you. It's very natural for the viewers to look at capital protection. And, in order to get that capital stability, they enter into closed-ended funds, that we generally see. But you need to understand, in the current market scenario, it's always best to stay with open-ended schemes and to not have too much, allocation in lump sum amount in a particular fund until and unless it's a flagship fund or, it's a very, very good fund. So be very careful on that note. Let's move on to another email that's coming from Fahim from Bengaluru. He has emailed up that he's 32 years old and is planning to retire at the age of 40. 8 years from now, he has two tax saver SIPs, SBI E-Wealth Builder, which is a ULIP, where he's investing 3,000 rupees, and DSP BlackRock Tax Saver, where he's investing 5,000 rupees a month. Now, his target is to retire rich, and he wants to know if he's investing in the right funds. I am not sure if ULIPs are the best option, because I have always emphasized and I always believe that you should keep your insurance and investment plans separate. But let's hear from our expert. What are you recommending, Fahim Vatsal?
Yeah, so I believe Fahim wants to retire in the next 8 years and is currently investing 8,000 per month.
Yes.
This itself is not enough to create a retirement corpus. So, the thumb rule for a retirement corpus, that too if you have minimum 15 years, is to invest at least half of your expenses. So if I'm spending 50,000 today, then I need to invest 25,000 for the next 15 years to make sure that I continue to live my same lifestyle. So that kind of so if he's spending only 16,000 today, and if he invests 8,000 every month for next 15 years, he will have a decent retirement corpus. Otherwise, I don't think it's good enough. Second is ULIP is helping him to get the tax benefit, but I don't see that as a good investment opportunity because it has its own charges and costs associated with it. So if he rather goes for a term plan and invests in a regular ELSS fund, he will be better off than doing a ULIP combination.
Right. So that's the advice for you. You really need to work on your retirement corpus, because when your goal is retirement planning with the current investments, you cannot do that. But what our expert have recommended, definitely you can, avail those things and get the benefit. But now let's look at another email that's coming from Arindam from Kolkata. Now he's 40 years old and is looking for geographical diversification to reduce his risk. He has an investment in Motilal Oswal Nasdaq 100 ETF. He wants another foreign fund mutual fund to invest in via SIP for the long term. What are you recommending? Very, very interesting question, I would say. And it's a very good ETF as well. What do you think, Vatsal?
Yeah, so for Arindam and even other investors, nowadays we started getting these queries for outside India investment.
Yes.
What I believe is that it's a very, very speculative call one can take, but it's not easy to judge which markets will do well from here on. So Nasdaq reaching all-time highs and the other markets going down, no one expected, but it's a good investment that he's done. He can look at some other countries where the downside is very low. So China, for example, has corrected drastically, and certain good ETFs are available. However, I'm not the best person. So I would like to say that to comment on a China market or any other global market, I know about the Indian market. Given that there is this ETF fund which is called ICICI Nifty Next 50 ETF, which is about companies which are from 50 to 100. So not the top 50 companies, but companies which are 50 to 100. And we've seen that these companies do very well compared to the index over different time frames. So he can look at investing in this ETF if he is keen to do so.
Right. But Vatsal, don't you think instead of going for an ETF, he can also look for, long-term equity funds? For example, Parag Parekh equity fund, it has, if you look at the portfolio allocation, sectoral allocation, it has a more diverse, sectoral allocation, and even, it's including that kind of geographical diversities. It is investing in US-based companies, Japan-based companies. So what's your take on that? Should he look for a different category because he's ready for, long-term investment?
To be honest, it's very difficult because ultimately it's the fund manager's call. So, what if the fund manager's selection goes wrong? So ETF investing trumps that, and ETF investing helps you get the best of the market. So my opinion is that you can't compare ETF versus selected funds because the purpose and the alpha generation is different. Given
What I
coming to
mean
the
to say here is,
yeah,
when he is asking for another investment, as in one
yeah.
ETF he's already having. So second
Hmm.
should be an ETF category or some other category for, better alpha generation and to get that diversity.
Uh, it's again a tricky situation to judge because it depends on the comfort of the investor to whether he wants to invest in a active managed fund or not. If he's okay to invest in an active managed fund, then he should definitely look at investing in actively managed Indian funds which have an exposure. So SBI focused equity also has an exposure to US equity, and now many funds have started increasing their exposure to other countries. And but it has to be a very cherry picking kind of a thing. And the fund which you mentioned, Parag Parikh long term equity fund, uh,
Okay.
their heavily exposure is only on Google, so that's the only company they
Right.
own in the US. So it comes. We feel it's concentrated, and that's where we
Absolutely.
would like to. Yes.
Yes. So, Arindam, if you're looking for actively managed funds, then definitely you can look at other funds like SBI Focused Equity, Parag Parikh Equity. But otherwise, our guests have just recommended you another ETF, which is passively managed and definitely will give you good returns. But all the very best with your investments. Thank you, Vatsal, for joining us today, sharing your perspective with our viewers, addressing their concerns. Viewers, that's all the time that we have on this edition of the MF Guide. Save, invest and prosper with the right guidance right here on Business Television India. Thanks for watching us today.